Bitcoin's triple death cross, bearish omen or epic buying opportunity. We're going to climb in and find out. Hey guys, it's Keith Allen. What a week we're having here, and my gosh, where are we going from here? As the title said, 3 death crosses in 9 days, and guess what? It looks like we're actually headed for a 4th one here. I'm going to open right up here on the charts, and we're going to climb in and see what's happening and take a look at the history of death crosses, because these obviously are technically considered bearish indicators, but they don't always have continuing bearish outcomes. So we're going to take a look at the history of these death crosses, the history of these structures, and see which scenarios look the most bullish and which look the most bearish when it's all said and done. I want to start here, of course, on the candle chart, because this yellow box here really highlights all of the area, really where all the drama is taking place right now. As you can see, last week, this was on Tuesday last week, August 6th, we had the first death cross between the green 21-day moving average and the blue 100-day moving average. We then, a few days later, crossed the red 50-day moving average and the purple 200-day moving average. That was on Saturday. Then just even more recently, we had this cross between the 21-day and the 200-day moving average. This is the one I'm really going to focus on here. But as you can see, the next death cross, the 4th, the quad in this series, is imminent here as the 21 is headed for the 50 as we speak. We had that retest of the 50. Look at what's happening here, right? We had this insane 12% candle here on Thursday, when right after we had got this initial death cross here, right? It came to a retest of resistance through the 200 and the 50. Then we retested the 50 not once, not twice, 3 times, 4, and today the 5th retest of the 50-day moving average. I was hopeful we would get a full test up to the 200-day. That hasn't materialized yet. It possibly could. We just have to see how things develop from here. So I told you I wanted to look at kind of the history of these death crosses, and that's what we're going to do here. I spoke about this a little bit the other day on Blockchain Banter, and I'll be honest, the chart that I use mostly, because of the history it has, is the Bitstamp chart, because it has the most history on the most pairs. But I realized after somebody actually called me out in my comments that I wasn't showing the full history. So I found a Bitcoin index from TradingView, and it dates back to the genesis of Bitcoin making it to markets. And so this one goes all the way back to the earliest days of Bitcoin back in 2009, right? So obviously it took some time to get that, to have a 200-day moving average, and it took even longer to have our first death crosses come into the field of view. And that happened, that first one happened in September of 2011. Now, this phenomenon has only happened 10 other times, so 11 times total since Bitcoin first hit the markets. And so back in 2011, that resulted in like a 67% correction here. There was a recovery after that, of course, but as you can see, that recovery was actually short-lived. Things broke down again, but this is where we're talking the difference between kind of a bearish confirmation here, what we got here, and this really a retest. As you can see, there was a lot of drama up here trying to retest resistance here, and it was a battle until another death cross. Things broke down a bit, but that was just a 6% correction, and right back into a beautiful bull market here for Bitcoin. So that's really the kind of scenario that would just be amazing, right? If we had that, and that's what obviously bulls are hopeful for at this point, but lots of uncertainty, right? So we'll move forward to another one here in March of 2014. Again, confirmation that the bull was done. Here we had more drama, kind of a distribution rally, failing to regain support, failing to RS flip effectively the 200-day moving average. It broke down again, and this, of course, led to a much deeper correction, 70%. But look at this, right? Within this realm, right? There was a recovery here after. You look at the prices we're talking about back in 2015. This was $165. But we had these death crosses unwind here after this local bottom, and on the recovery, another breakdown. Right, I'm not sure what the catalyst was here that flushed it back down to a double bottom. This was establishing that bottom here, and the rest is history. Bitcoin climbed out, epic bull run again, and you can see this one went for a long time. That was serious. Again, here we see this was the top of the 2017 market, right when Bitcoin made it almost to 20K. Back in the day. This is where I first entered this game, right here in the 6K range. What a lesson that was learned here, right? So this was really my first foray into the punishment of the bear market after just a euphoric rise, rapid rise for Bitcoin, and a lot of people have been introduced to Bitcoin in this manner, and this is why it's always so punishing, right? And so this death cross here led to a 66% correction from here. That was actually more than 66% from the top, but from the cross, that was a 84% from the top, but from the death cross, 67% or so, until things bottomed out here in December of 2018. And those, that time of the year just seems to be a good time historically for Bitcoin. That fourth quarter is really where we tend to see things turn around, and that may be what we see this year as well. We'll have to wait and see. So this was a long recovery to get back to, obviously the bounce here was nice, but it still took a long time to reclaim those prior levels. There was a bit of a fake out here, a mid-cycle correction with another death cross. Big deep one, right? 56%. And, I honestly think that this is where the recovery would have been and begun from. But this is COVID, right? And this was the COVID crash. So that was a bit of an anomaly. Nonetheless, things bottomed out, V-shaped recovery. And you can see how things ran from here in 2020. That took us to a 2021 top. Many people view this. A lot of technicians view this as really really the technical top of the 2021 market. You can see the breakdown here occurred. This led to a distribution rally. This distribution rally, I think, had a little bit of manipulation to it, as I remember back in those days. And you can see the recovery here, the unwinding of the death cross, but that was also short-lived, as we had another rejection here. This was, if I turn the other moving averages on, you'll see that this was actually here we go. This was a test of support here of the 100-day moving average. And that's where Bitcoin found its footing to push to a new all-time high. But this, as I said, kind of a manipulated distribution rally that took us to that 69K level, which is obviously a level that has been giving us a fit here this year since back in the beginning of March. So again, coming off of this 2021 top, we broke down one more time, and this was a confirmation, in my eyes, confirmation that the bears are back in control, led us to into a bear market. That was a 67% from the death cross, mind you, not from the top, but from the death cross. From the top was obviously more significant than that. Bottomed out here after the FTX crash, and there was a lot of thought that we would go lower from here. We didn't. Surprisingly, that held. There were some issues with, the concern about counterparty risk was really peaking around this time, with the FTX crash and Luna and Binance, and a lot of issues with Binance US having some problems hanging on to banking partners, et cetera, et cetera. The CZ case starting to form in the public eye as well, with the Department of Justice, et cetera. So we did have a consolidation here and started to dig our way out into what developed into, obviously, a better bull run. There was, of course, one more death cross here in August of 2023. This again perceived as a mid-cycle correction that obviously led us to new heights here. Now, we peaked a bit early in a lot of people's eyes, right, with a new all-time high, and we can see that a little bit more clearly here as to what we're dealing with now, right? Things peaked here with an all-time high, and now we've had so much drama trying to reclaim this 69K level, this 2021 top since that date. Now here we sit, and the question at this point is this here the bottom? Is this spike we had down to 49.5? Is this going to be the local bottom, and is this going to hold, or is this death cross? And like I said, the fourth one is staring us in the face. We're going to see this probably in the next 24 hours, right? Is this going to drag us lower? Now we have local support here at 55, and of course here at the 50K level, and we can see that on FireCharts. I want to look at zoom out a little bit, and we can see strongest bid liquidity here at 50K, more support at almost the same amount here at 55K. And what we had been seeing in the last 24 hours, a nice rally back after yesterday's economic reports. And today's economic reports were actually pretty good, I thought. Nonetheless, market ran into resistance up here and then flushed back down. And I think one of the reasons that things did flush back down, I'm going to share a chart from Kingfisher. I haven't shared this before, but I really like what these guys are doing. And you can see big liquidity cluster here, ripe for the pickings. And it did get, and it did indeed get picked. I don't know if this will refresh here for us, but well, there you go. It's gone. It got wiped out. So that was the low hanging fruit. Not surprised that we found some footing and bounced from this level, but as you can see, there is more to go. So let me adjust this a bit into at least our active range of activity, and you can see a good amount of liquidations heading all the way up to that 73K, with a bit. That really kind of starts in the 70K range, I think. Our nearest on the short side is going to be above 60K, right? 61 up to about 63K. There's a nice little cluster here. And you can see it's not heavy, but it does extend down to 40K. Will we clear this out, or are we going to go back and run at this first? This seems like it's easier to get. We'll just have to wait and see how things develop from there. So to put things in perspective, we take this data and we look at a lot of different factors. And obviously these technical indicators are an important part of what's going on. But we also have to look at what is happening in the broader market, right? The economic outlook, the potential for rate cuts, which, high probability, and today's numbers, I think, increase the probability that we'll see a rate cut in September. I'm no economist, so take that with a grain of salt. But pending rate cuts coming here at the end of the year, I think that's baked in at this point. We do have obviously some uncertainty, growing uncertainty in the geopolitical environment and with the domestic political environment. Obviously things percolating in the Middle East, things percolating in Ukraine and Russia. That's never a good thing. And those can always deliver a black swan. Those black swans are circling the pond every single day. It's just a matter of when one decides to land on us. And then, ETF flows still positive, net positive these past few days, despite the price corrections. So I think that all in all fundamentally speaks pretty well for Bitcoin at this stage. And it comes down to, where your conviction is. Do you think that the 4-year cycle is still alive? Do you still think that the post-halving narrative is still alive? The 4-year cycle narrative is still alive as well? And whether Bitcoin can indeed rebound from this correction here and move on. So I want to look at back at our historical chart here, which we've learned so much from this past year. We do have this macro trend line running from the FTX crash. I'm going to expand this here for you so it's easier to identify. We have this macro trend running. And obviously a deeper correction. We finally got a correction here to the 50 to 52K range. That got flushed a bit. We now have the 40, if this doesn't hold, if we get another retest here, right? So if we got another retest, and I want to turn the weeklies, look at the weeklies here for a second. If we got another retest here, and keep in mind that these moving averages are changing constantly, right? With time, as price moves up, they will drag up. As price goes down, they will move down. And so, where things land, if we do get a move from here, if we have further consolidation in this range, which, by the way, it's good that we're back in this red box of interest for the moment after losing it. But if we continue to chop in this range, maybe these moving averages get drug up. I do like the fact that at the moment we have some confluence between this 44 and 45K level and this trend line. This to me would be the ideal spot. If we had another flush, this would just be the ideal position of strength to start that next leg up. But if we lose this, I've got concerns that could be, the invalidator and the end of the market. So, and certainly if we lose this 200-week moving average down here, that would be the end. Presumably, if this takes time, this could drag up and end up being up here at that point. So these are the things that we have to watch develop as time goes on. So now that we're in this mess now, right? Our best case scenario that we do potentially get another flush lower to establish a bottom, whether that, or confirm the bottom, I should say, whether that happens here at the 55K level, at the 50K level, or if it potentially takes us lower and we start looking into this, here's that 45K level that I just talked about. Any of those are on the table. The problem is it's just hard to identify which one is potentially going to hold. You can see where the strength is right now. 55 is building up in this range, and we have just a little bit heading down sub 40K, which I showed you. There's actually some liquidations down at that level as well. So what are we watching? We're watching to see where liquidity moves, and you can see heavy ask liquidity above at 70K. We have some decent rungs, decent blocks of bid liquidity here at 50 and 55, but we want to see more. We want to see more volume coming here to where the bid side is brighter than the ask side. And whether that forms by just having more stack in this range, big buy wall comes in here, or if this erodes by dropping down and distributing into the active trading range. However it happens, we ultimately want to see price move back up into this range and go after that all-time high. Again, you got to know what your invalidations are. For me, I showed you where it is on the chart. I'm watching these levels very, very closely. Obviously, losing one level leads to the next level of interest, and that's largely where we sit, right? So at the moment, the 50-week moving average is holding as support. That corresponds and correlates with this 50K level. If we lose it, we get this dream target that I've been looking for a long time. And if we lose that, yeah, there's going to be deeper targets, but it's going to be a long time for the recovery to happen after that. Let me just take a quick look and see if I've covered everything that I'm looking for, everything I wanted to share with you guys today. I think, what happens from here really is going to be essential to the rest of the cycle, really going to define the rest of the cycle. To sum it up, we're kind of in a pattern here. We have another round of economic numbers coming tomorrow in terms of what's tomorrow. Tomorrow we'll see the U.S. Jobless claims, initial jobless claims, which always seem to be interesting and have been trending in the right direction. That's what has been triggering a lot of the volatility here the past couple of weeks. First, the uptick in unemployment sent things plummeting, and then the supporting numbers that we saw over the past couple of weeks initially helped drag things down, and then a bit of a stabilization, that it wasn't just a continued flush in the unemployment numbers. I think quelled some concerns that we're going to see a massive spike here. that may still develop. We might see something tomorrow that could trigger some volatility, and that's what we're going to have to watch. So I guess that means we just have to stay in tune to what's going on here. These death crosses certainly often signal bearish. Excuse me, guys. These death crosses certainly often signal some bearish trends, but they can also mark the end of a correction and the beginning of a new bull run. So that is what we're watching for here at this stage. And with a little bit of luck, we just might get it. Timing wise, don't expect for it to necessarily happen tomorrow, right? We've said that we could consolidate in this range for an extended period of time, and that could certainly happen through the next month or two. Historically, we start seeing Bitcoin look more promising around Q4. Obviously, we have an election cycle, and we have some easing of Fed rates all coming up here that could have some influence on the price action. So do with that as you wish and as you may. I would just say stay in tune to what's going on here. Know what your levels are. Know what your invalidations are, and play the game accordingly. Going to wrap it right there, guys. Big day for me, and a big week as kids starting high school and college, respectively, this week. So not sure if I'm going to be able to do an analysis tomorrow or Friday because I will be on the road. If I can crank one out in the morning before I leave, I will. And of course, if I see anything developing here through the day that I think deserves your attention, I will do my best to post that as well. If you like the streams, do me a favor, smash all the buttons, share a comment. I love the comments and I engage with each and every one of them. And of course, that helps me grow. Alexander, thanks for the comment and thanks for following along. I appreciate you and everybody else who's doing the same. If you want more info on FireCharts and any other tools I'm using, you can click the link in the YouTube channel, and you can also visit the profile on the Material Indicators Twitter feed and follow the link to the website from there. Have a great day, guys. As always, trade safe, my friends.